Today, I want to talk to you about a little known tax filing status that could potentially save married individuals a significant amount of money, filing as head of household while still being married. It's a unique situation, so let's dive right in and see if you might qualify. Now, most married people think that they have to choose between married filed jointly and married filed separately on their tax return. But under certain circumstances, the IRS allows you to be considered unmarried for tax purposes, which means you might be able to file as head of household. This can be beneficial because of the lower tax rates and higher standard deductions that come with the head of household filing status. Let's talk about the qualifications. To file as head of household while being married, you must meet all of the following conditions. 1. You and your spouse did not live together at any time during the last 6 months of the tax year. That's from July 1st onward. Please note that temporary absences do not count. If your spouse was away on business, school, or military service, but you intended to live together again, you're still considered married. 2. Provided over half the cost of maintaining your home. You need to have paid more than half the costs associated with keeping up your home for the year. This includes rent or mortgage interest, property taxes, utilities, repairs, and groceries. 3. Having a qualifying child or dependent. A qualifying child or qualifying dependent live with you for more than half the year. This is typically your child, but certain other relatives might also qualify. 4. File a separate tax return. You're choosing to file separately from your spouse. If you meet all of these criteria, the IRS considers you unmarried for tax purposes and you can file as head of household. So why would you want to file as head of household instead of married filed separately? There are a few key benefits. Higher standard deduction. For the 2024 tax year, the standard deduction for head of household is $21,900 compared to $14,600 for a single filing status or married filed separately status. Favorable tax brackets. Head of household filers often benefit from wider tax brackets, which can result in lower overall taxes. Eligibility for credits and deductions. You may qualify for certain tax credits and deductions that aren't available when filing as married filed separately, such as the Earned Income Tax Credit. Let's put this into perspective with an example. Imagine Susan is legally married to John, but they've been living apart since June 30th, 2024. She takes care of their daughter, who lives with her full-time. Susan pays all the expenses for her home, including rent, utilities, and groceries. Here's how Susan meets the qualifications. Lived apart. She and John have not lived together during the last 6 months of the year. Maintained the household. Susan paid over half the costs of maintaining her home. Qualifying child. Her daughter lived with her for more than half the year. Separate return. She's filing her own tax return, separate from John's. In this case, Susan can file as head of household, which could offer significant tax savings compared to filing as married filing separately. Before you decide to file as head of household, keep these important points in mind. Legal separation or divorce is not required. You do not need to be legally separated or divorced to claim head of household. The key factor is that you didn't live with your spouse during the last 6 months of the year. Temporary absences do not qualify. If your spouse was temporarily absent due to business, medical care, education, or military service, but you intend to live together again, you cannot file as head of household. Honesty is crucial. The IRS takes these qualifications seriously. Misrepresenting your living situation can lead to penalties, interest, and potentially fraud charges. Keep thorough records of your living situation and the expenses you paid to maintain your home. This includes bills, receipts, and any legal documents related to your separation. So, if you believe you qualify for head of household status as a married individual, here's what you should know. Evaluate your situation. Carefully assess whether you meet all the IRS criteria for being considered unmarried and qualifying for head of household status. Gather documentation. Collect proof of your expenses and living arrangements. This might include lease agreements, utility bills, and school records. Consult a tax professional. Tax laws can be complex, and everyone's situation is unique. Our tax practice can provide personalized advice and ensure that you're filing correctly. File your return. When you're ready, complete your tax return using the head of household filing status. Make sure to indicate that you're married but meet the criteria to be considered unmarried for tax purposes. In conclusion, Filing as head of household when you're married can provide significant tax advantages, but it's essential to make sure you fully qualify. The IRS has strict rules, and the consequences of failing to file correctly can be severe. At Reliance Tax, our goal is to help you understand complex tax topics like this so that you can make informed decisions that benefit you and your family. If you found this video helpful, please give it a thumbs up. Don't forget to subscribe to our channel for more tax tips and updates. If you have any questions or topics you'd like us to cover, leave a comment below, and I'll be sure to address them in future videos. Thank you for watching, and I'll see you in the next video. For more detailed information, check out IRS Publication 501 and 504, both of which cover filing statuses for divorced or separated individuals. Links are in the description below. Remember, staying informed is the best way to maximize your tax benefits and avoid potential pitfalls.